Solana might be on the edge of the biggest breakthrough in its history, something that could pull billions into the ecosystem and rewrite the future of altcoin investing. But the question everyone's asking right now is simple. Is a Solana ETF really coming, and what would it actually mean for the market? Before we break down the filings, the rumors, the global approvals, the inflow predictions, and the behind-the-scenes moves from some of the biggest asset managers in the world, make sure you subscribe to Crypto News, where we track every ETF, every listing, and every shift Wall Street doesn't want you to miss. Because once you hear what's happening behind closed doors, you'll understand why the hype around a SOL ETF isn't just speculation, it's momentum. Why Solana suddenly matters more than ever. Solana wasn't always part of the ETF conversation. For years, the narrative belonged to Bitcoin and Ethereum, the safe choices for institutions. But things changed fast. Solana's network speed, the flood of new projects, the explosive growth in users, and a massive rise in developer activity pushed SOL into a new category the altcoin institutions can no longer ignore. And that's the key. ETFs aren't built around hype, they're built around demand. They're built when large investors want exposure without touching exchanges, wallets, private keys, or regulatory headaches. Solana, whether critics like it or not, has become the third major asset institutions believe might fit that framework. But Solana's story isn't just about money flowing in. It's about a blockchain proving it can operate at scale, attract developers, and survive setbacks that would have buried other networks. The path to an ETF needed a strong narrative, and Solana built one. But the real twist came when approvals started happening outside the US, and suddenly, everyone realized something bigger was happening. The world moved first, global Solana ETF approvals. While the US dragged its feet, other regions didn't wait. Hong Kong shocked the market when regulators officially approved the first spot Solana ETF, a move that sent a loud message across global finance. This wasn't a futures product, not synthetic exposure, spot. China AMC launched it across multiple currency counters, making Solana accessible to a massive pool of international capital. For the first time, investors could buy exposure to real SOL through a regulated exchange like they would a stock. At the same time, the US market started experimenting with Solana-related products, not full spot ETFs, but the building blocks of one. Bitwise rolled out BSOL, a staking-enabled Solana fund. Grayscale introduced GSOL, giving investors a structured way to get exposure. Other issuers began quietly positioning themselves for a full spot ETF listing. The domino effect had started. Once a major financial hub approves a product, others feel pressured to follow. That's why analysts say the Hong Kong approval wasn't just a milestone, it was a signal. And that signal was heard loud and clear in the US. The US ETF race, what's already filed? Behind the scenes, the US is closer to a Solana ETF than most people realize. Multiple issuers, including giants like VanEck and 21 Shares, have already filed or updated their paperwork for a spot SOL ETF. These campaigns don't come cheap. Firms don't waste money unless they believe an approval is possible. But here's the twist. The SEC has been unpredictable. Between staffing shortages, political pressure, leadership changes, and even government shutdown delays, timelines have gotten messy. But filings are not being withdrawn. They're being updated, extended, strengthened. In ETF language, that means one thing: they're preparing. But preparation isn't approval. The SEC has to make a call, and the entire market is watching for clues, including one subtle shift many analysts consider the biggest giveaway yet. Bitcoin and Ethereum ETFs cracked open the door. The SEC already defined a legal framework for crypto spot ETFs. Now that the structure exists, it's harder to justify saying no to Solana unless the agency wants another legal battle like the one it lost to Grayscale. The stage is set. Filings are active. Issuers are ready. But approval isn't just about paperwork. It's about demand. The money behind the move: inflows, staking, and institutional appetite. Institutions aren't waiting. They're already pouring capital into Solana-related vehicles. The numbers don't lie. SOL is receiving hundreds of millions in inflows before a full ETF is even live. One huge factor: staking. SOL offers 5 to 8% staking rewards, and some ETF-style funds have started incorporating staking returns into their structure. That gives institutions something Bitcoin and Ethereum can't: yield. Staking turns a passive asset into a productive one, and funds want that advantage. JP Morgan analysts even released projections estimating Solana ETFs could bring in around $1.5 billion in the first year, numbers that rival early-stage Ethereum ETF estimates. But what's more interesting is how inflows react during price dips. Even during Sol pullbacks, money keeps entering. Investors aren't scared by volatility, they're preparing for the moment a US ETF becomes real. That's the kind of behavior you see before a major market shift. And yet, nothing in crypto is guaranteed, not even an ETF. The risks that could derail everything. Every narrative has a shadow side, and Solana's future ETF isn't immune. Regulation is the biggest wildcard. The SEC could delay, extend, or ask for more data. The agency often slows decisions when it's under political pressure or internal disagreement, and when crypto is involved, the process becomes even more chaotic. Then there's market risk. Solana's price has seen heavy swings. Sudden volatility can spook regulators or issuers, especially when altcoins drop sharply while ETFs are under review. Another risk is investor competition. Bitcoin and Ethereum ETFs soaked up a huge portion of available crypto ETF capital. Institutions might hesitate before pushing deep into a third asset, even one as strong as Solana. And we can't ignore ecosystem risk. Network outages, congestion, or developer issues can influence ETF confidence. Any major failure could give the SEC an excuse to stall. Still, every risk has a counterpoint, and Solana has been overcoming those obstacles one by one. If a spot SOL ETF does launch in the US, the impact could be massive, bigger than most people expect. What a US Solana ETF would mean for the market. A full US Solana ETF wouldn't be just another listing. It would be a statement. It would signal that altcoins are officially on Wall Street's radar. It would open the gates for pension funds, wealth managers, and institutional portfolios to treat Solana like a legitimate asset class. And once that happens, the flow of capital changes permanently. Solana becomes accessible to millions of investors who never touch crypto exchanges. Analysts start including SOL in institutional reports. Hedge funds begin strategizing around SOL exposure, just like Ethereum. And developers see the network as a safer long-term bet for building future apps. A Solana ETF wouldn't just move price, it would move confidence. It would validate the ecosystem in a way no partnership, no celebrity endorsement, and no announcement ever could. As more altcoins prove themselves, the ETF market will expand, but Solana has a chance to be the first altcoin after Ethereum to break through. And when you're first, you shape the narrative. Is a Solana ETF coming? The answer, yes, it's coming. Not just because Hong Kong already approved it. Not just because issuers filed in the US. Not just because institutional money is waiting on the sidelines. It's coming because the market has reached a point where the SEC will struggle to justify saying no. Solana has momentum, it has adoption, it has developer growth, it has staking rewards institutions want, and the global market has already made the first move. A US approval will take time, but the direction is clear. If you want the moment-by-moment updates, the filings, the outflows, the inflows, the rumors, the leaks, the shifts, and the decisions the second they happen, hit subscribe to Crypto News so you never get left behind. Because when the SOL ETF drops, it won't just change Solana, it'll change crypto.